All right, we're down to the last session, and we're going to try to tie it all together because it's great to have speed of operation to kind of work with your existing business to modernize and optimize it, and then about the speed of innovation, but you got to get all of that also new products approved into the different states. So I'd like to welcome up to the stage Kay Godfredson and Eden Insirabek. Eden is from AM Best, and Kay has her own law firm and was former deputy director at the Insurance Commission at Iowa. Thank you.
Absolutely.
Please help me welcome them to the table.
Thank you.
All right. So we talked earlier about some of the opportunities that the AM Best rating is kind of bringing to the table. Before we get into that, I'd like each of them to kind of introduce themselves, their background, and kind of what their roles are. So Eden, you want to start, please?
Sure. So I've been at AM Best for 3 years. So I primarily am on the analytical side of P&C ratings. Also, lately, I've been very involved in innovation within AM Best and developing innovation criteria. So I come from Axis Capital Holdings. Actually, most of my career was outside of the rating. I was in corporate development, mergers and acquisitions, started the industry at KeyBank Capital Markets on equity research side, capital markets.
Thank you. Kay.
So I started my insurance career as a claims representative for a Fortune 100 company, and I just fell in love with the intersection of the contract and real people's lives. And that caused me to go ahead and listen to the nudge and go to law school. I went back to the Fortune 100 company, and I was really fortunate to spend a good 13 years at least in the Office of General Counsel. I had a rich and dynamic experience in the Office of General Counsel, working with everything from A to Z with that insurance policy, and in at least 11 states, and also some lobbying. When my role got a little bit tighter, I was really fortunate, and I served as first deputy commissioner at the state of Iowa in the insurance division. And I was really fortunate to work with insurance companies, agents, and startups, and mentored as well at the Global Insurance Accelerator. That gave me that additional rich experience to see it not only from the consumer's eyes again, but also the regulator's eyes. Those regulators who I had worked sometimes shoulder to shoulder and sometimes across the desk working and arguing about a consent order, sometimes the dollars as well as the language. And that then led me to start my own law office that I can represent insurance companies as well as startups.
Great. So wealth of background here. So Eden, first question to you. Why does AM Best think innovation is important, and what factors led to the decision to modify that criteria, and what's been the reaction out in the industry?
Right. So at AM Best, so really, innovation has always been a subject at AM Best rating committees, right? We always talk about companies' innovative ways of either deploying capitals, new product introductions, or leveraging technology, right? So it's been sort of an implicit part of AM Best rating process for decades, right? And speaking of innovation in general, and I mean, it's been with us since the Stone Age, right? It's nothing new, and it's been in the insurance industry since Babylonians and Chinese were trying to use first insurance products back then, or if you want to start it at Lloyd's, but so it's been with us for a while, right? So back to your question, sort of why are we doing it now, right? So first part of the reason is, and this is not new to you or the audience really, is sort of the accelerating pace of change, right? Especially relating to exponential change in certain technologies. And if you look around us, I mean, insurance industry is really changing already quite a bit. I mean, with the way the third-party capital with insurance-linked securities is transforming the reinsurance space, right? The way the changing consumer behaviors is affecting distribution channels and new product introductions, right? Or the way that this whole digitization of the economy is creating all new types of exposures like cyber, right? So there are a lot of changes going on. But putting all of that aside, really, if I had to pick one factor, the most important factor that sort of initiated this is the industry itself. So about a year ago, we did a survey where we sort of asked the industry, so how important is innovation, right? And overwhelming majority stated that innovation is either very critical or critical to their future success, right? And so this was really the main catalyst, or the most important catalyst, in making something that we did implicitly sort of explicit, right? And in terms of the industry feedback, it's been interesting. Actually, I was quite surprised just how favorable the feedback has been, as many in the industry do feel that this is necessary, right? And talking about this topic is necessary, and from the reading perspective as well. And there has been some feedback as well that, sort of, this is sort of hard to do and hard to quantify, right? Which is precisely the reason why we kind of made this public, just so we can get that industry feedback. And so the way to highlight the way we work through this is sort of we introduce the draft of the criteria, we send it out to the industry, and then the industry comments on it, right? And then we incorporate all of those comments into our criteria, and then reissue our criteria, revise it, and then we're in a second revision of criteria at the moment. And so we're collecting all of the insights and comments from the industry before criteria goes live sometimes next year.
Great. So Kay, this whole concept of innovation, even the regulators have, we're a little bit slow to the table, but they're picking up pace. And yet there's kind of a sense that some regulators are really on board with it, are really kind of advancing the notion of innovation, and others might be a little still mystified by it, maybe even a little scared. How often and when should companies reach out to regulators around innovative products, given kind of this diversity in all 50 states as to what level, the regulators are, kind of bought into the whole kind of innovation aspect?
Certainly, and I would say that regulators are along the spectrum, from those who are, I'm not going to say scared, those are fighting words where I come from, but those absolutely who have some reticence. And that reticence, it can be rooted in a real experience that they had to pull back a piece that was cloaked in the name of innovation that they thought was one thing, but it entirely, once they peeled back the layers of the onion, it was something really ugly, and it affected their constituents. And they had blessed it, they had approved it, they had acknowledged it. And so you want to understand some of that history if you can. When approaching regulators and understanding why they have those feelings. They are feelings. And then you have that spectrum along the regulators who, some of them, they have embraced technology for their own departments. They have embraced reg tech. They have embraced innovation along entire departments along the government spectrum. And are working with the NEIC to help the NEIC implement things. So their favor for regulation and innovation goes much farther than just for their own constituents, but also because they really, really, truly believe in it. So that spectrum, it varies. And it's based upon their knowledge, their understanding, their experience with the innovation. And so what you want to do is think of that regulator as your consumer, your customer when you approach them. You want to use the language that you can really educate them on what you are bringing forth for their constituents. No synonyms when working with a regulator. They may know your business, but they don't work in your business. They don't work your business every single day. So whatever that innovation is, help them understand how it will impact their constituents. It may be a back-end innovation piece, but still, why are you implementing it? Most likely it is to benefit their consumers in some way. And the second piece of it on how to work on that education piece with those regulators is frequency of communication. Get that into an agreement very early on. Understanding internally what those markers and what those triggers are of what you would want as a regulator, of what you would understand to be really important. Perhaps they are markers of when you're implementing and when something has changed according to the original communication. And another marker is that the pipeline of the regulator will be a little bit fuller. Maybe you're going to file something where maybe the rating mechanism is going to be a little bit more complicated than what you originally communicated. So thinking of the regulator as your customer.
Great idea. So Eden, obviously with the new rating, the innovation rating, there's kind of two different components. One is really around trying to innovate your existing operation, and one is around really the innovation around these new products and kind of new business models and things to think about from a future perspective. What have you gotten, and based on the conversations you've had with some people in the industry, some great examples of what maybe some people are doing to kind of give the audience an idea of what you might be looking at?
Right. So it's a big topic. It's absolutely a big topic in our discussions with companies, right? That's one of their main focuses is, right, operational efficiency. Yep. And so it really, really depends, right? Depends on the size and complexity of the company, the type of space they're in, the line of business, right? So there are a lot of different use cases that really depend on the circumstances that companies are in. So having said that, I think one of the overarching themes is that sort of having efficient infrastructure and having efficient systems that allows the companies to get to the market faster, introduce new products, and in essence experiment more is really what can be helpful in sort of spurring innovation, if you will. And I think that's especially true now with so many emerging risks coming. And I talked about cyber, but also opioid use, marijuana, driverless cars, and so on and so forth. So having that efficient platform where you can experiment on while managing your risk exposures, can be conducive to innovation. And interestingly enough, we also did a survey where we sort of asked companies sort of like, well, and what kind of technologies, do you think will impact your operational efficiency the most? And three main things came up: cloud computing, which was related to the efficiency of the infrastructure I just talked about, and also, not surprisingly to you or the audience, big data and AI as well. So on those front, in the AI front, obviously there's a lot going on. I think it's safe to say that I think everybody agrees that insurance industry sort of is generally seen as a laggard when it comes to consumer experience compared to some of the other verticals. And really that's where a lot of these advanced machine learning techniques are being used at the moment. You're familiar with the chatbots, obviously, but as well as sort of a lot of investments we're seeing in sort of in digitization of the claims processes from end to end that make the whole user experience easier and also has a benefit for carriers. Other than that, obviously, the use of advanced machine learning, companies use that to streamline their internal workflows, make them more efficient, and also policy administration systems. But another big topic, obviously, big data. There's quite a bit activity in that space as well, from consumer onboarding to underwriting to better risk selection to really enhancing the submission workflow, to even CAT modeling and so on. In some instances, in some geographies, like in Asia, they're much bolder in using big data than here, just given different regulatory environment. And then in distribution space, most of the investment seems on a speed and ease of submissions as well. So I think it's safe to say that really it's happening in pretty much all the areas. There's so many different examples. But one thing that sort of differentiates in my opinion, companies are those with the right culture and the right management team typically tend to leverage these technology the best.
Great. So Kay, obviously you're working with both some startups and some existing insurers that maybe have been around for decades or centuries, depending on the length of time. Are you seeing more of them? Normally we see on the InsurTech startups doing a lot of innovative products. And we think about that in that term, or an innovative new business model. Are you seeing insurers, traditional insurers, rapidly looking at trying to bring new innovative products to market and trying to do some more of that experimentation to what Eden's talking about?
Yes, and now when I compare about 5 years ago to today, it is so different. Today I am seeing incumbents, if I can call them that, they are absolutely growing their own, and then they are absolutely taking a look at the insurtechs, the innovators externally. And whether it's they are piloting with the external innovators or they are just going ahead and executing those license agreements. One thing that I have found that has changed, whether it's from my time as a regulator and also now, that incumbents are now, I think there's a level of additional trust. And also, it's the speed that we are asking ourselves to take on a little bit more. And that is that incumbents are asking those insurtechs, those technology companies, the innovators, to go ahead and get those approvals themselves, those acknowledgments from the regulators before they'll go ahead and execute on these large multi-state agreements. And so that's one thing that I find is somewhat curious, but I attribute to the speed that we need to be moving.
Yeah. So one of the interesting concepts that is now kind of coming out into the marketplace, been talked about at the NAIC for a couple of years. Kentucky recently adopted it, is the whole sandbox concept of introducing a new product out into the sandbox that they can monitor in a different way rather than having to go through the whole regulatory process, that might take much longer, and at the end may not really address the needs of the consumer or the business owner in that market. So I want to ask both of you, kind of, what's your thoughts on the sandbox? Kay, why don't you start?
I think it's a very smart concept. I think that considering we do not favor failure, like a lot of other industries see it as a part of testing anything, that insurance and financial services overall, we have to have a place to pilot. We have to have a place to test it and have to have a safe environment. At the same time, these sandboxes, they have some walls around them that they need to be a little bit not so, they need to be rigid to the extent that they have consumer protections. And so they are consumer protections that are agreed upon beforehand between the company and the regulator. And when I was a regulator and at the time that I was in the company, so long as they are designed based upon the line of business and the type of consumers that you are really targeting and your definition of success, those walls can be a little bit more rigid or a little bit more flexible, and even the timeline of that testing. So I'm strongly in favor of it.
Great. Eden?
No, I absolutely agree with everything Kay said. And if I can add anything, obviously regulation has always sort of been seen as one of the main obstacles to innovation within the industry, right? So this clearly helps. And if we can draw on some experience from some more mature regulatory sandbox environments out, and InsurTech and FinTech out in UK, Switzerland, and Singapore, right? I mean it's been very effective. Some even credit more mature sandbox environment in overall increase in InsurTech investments in Europe. If you look at Europe 5 years ago, it was only 12% of the overall InsurTech investments were in Europe. A year ago, it was over 30, and many rightly or wrongly credit some of that rise of investments in Europe due to these regulatory sandboxes, the maturity of it.
Great. So really, I think one of the comments coming out of both of your perspectives is that the insurance industry, whether it's a startup or it's an incumbent, can really embrace a lot of these new concepts and look at regulation and some of the ratings aspects and how we're trying to push the industry forward kind of innovatively, embrace it rather than really kind of be a little bit distant from it and maybe a little bit cautious of it. Would you agree?
Yes, definitely. And I would add another group to that, consumer groups, that if there's another way for it to be that much more transparent to the consumer groups and for them to see what is happening in the testing and what that testing means, that then as those regulations, as they need to transform for these new products and these new services for the consumers of today and consumers of tomorrow, because those consumer advocates, that's who they also serve. that makes it that much more nimble. So I would also advocate for that.
Great. So with your broad engagement in the industry and the new players, what advice or recommendations would you give to this audience, about the future of insurance, and taking your experiences and your kind of recommendations coming out from a ratings perspective and your from a regulatory perspective, what would you tell this audience? Eden.
All right. I'll give the most important advice, in my opinion, in regards to this is don't take this type of advice on future insurance from a rating agency. But no, in all seriousness, though, I think the future of insurance will be driven by the digitization of the economy, right? And I don't want to speculate here about blurring boundaries between the digital, physical, and biological worlds, and as some call as the fourth industrial revolution. But I think what is fair to say that the potential disruption will create a lot of opportunities for those companies that have the right leadership teams, the right culture, and innovative DNA to sort of take advantage of these trends and position themselves well for the future.
Great. Okay.
I would second all of that, and I know that a good panel sometimes has a little bit of tension. I'm sorry, no tension on that one. So absolutely agree. I think I would recommend also getting the opinion of those people who do have some disagreement, and getting an understanding of why and their position of the road that they have been on, so that you can perceive your consumer that much more, because again, that is where some of the most fruitful innovation can come from. The rating agency, the regulator, the companies, they all come at it at such a different angle. They grew up with such different motivations. So I think that it's much better if all of them are at the table and looking at innovation through their own angle, but also sharing their thoughts.
Great. So last question. We're 4 years into InsurTech, kind of when it kind of separated away from FinTech and kind of became its own momentum and own phenomena. We're 4 years with InsurTech Connect. What do you see out there in the next year? Because the pace continues and the money continues to flow. It's not stopping. We originally thought it could have been like another, this too shall pass, and it hasn't passed. In fact, it's gained strength. Where do you guys see it in a year, 12 to 18 months out? Eden?
I think I see more of the same. I think this trajectory that companies are on in investing their digital capabilities, I think that's absolutely going to continue. I think the consumer really dictates a lot of these things, right? Ultimately, and consumers is used to certain things from other verticals, right? So I think I see continuation of focus on consumer, digitization, efficiency, pretty much the trends that we're seeing now in ways of leveraging some of these emerging technologies. So
great. Okay.
I also see that agents are demanding more technology, and that absolutely seamless interface, so that they are not kept back on their heels when they are answering those questions from their consumers and the company's consumers. So I see it in terms of whether it's the interface of the cars that have more and more sensors, and the lives that we all have more sensors, that the consumers too, we will be asking how these can benefit us with our insurance policies, that we'll kind of wake up and understand that there may be a way that we can actually involve ourselves a little bit more in our insurance lives.
Great, thank you. So I'm going to open it up for any questions from the audience. It's hard for me to see up here. I feel like I'm Columbus at the end of the ship.
We could do it.
No questions. All right, both Eden and Kate. Oh, one over here. Yes, go ahead.
Completely missed the presentation. Sorry, we just got here. From a regulatory perspective, just your thoughts on what's the threshold for where we can use information insurance that doesn't
Biases against. So unfair. Are you speaking unfair discrimination?
Yeah, so when you start to perceive this extra information that insurance companies are using, either via scoring mechanisms or kind of anonymized data, where does it get kind of tricky in terms of regulators saying, we really don't want you doing that to our constituents?
It will depend on the jurisdiction. It will depend on the line of business. And the questions that I would ask if I were approaching a regulator with it is being able to draw that, first of all, causation. Sorry to give a legal textbook answer, but I would go to the causation for a lot of regulators because they've gotten really uncomfortable with just, first of all, going with correlation. Give me a line of business and give me a state, and I'm a little bit more targeted.
The causation.
Good. All right. Any other questions? All right. Well, please join me in thanking this panel. They'll be around throughout the conference, and I encourage you to go up and speak with them. Thank you.
Thank you. Thank you.